Hello there, welcome back to EMS Grade 9. Uh, in this video, we're going to look at a question on accounting equation. This is a question from June 2018. And the question is analyze the following transaction, put details on the elements of the accounting equation as per, as per the table provided, showing increase with a positive and a decrease with a negative. Example, we are given an example of received 1,000 rands from Kruger attorneys for the office space they are renting. Then on this transaction, we are seeing that the account that is being debited is bank, and then the account being credited is rent income. And then we're having a positive for 1,000 under assets, and then it's also affecting owner's equity with a positive again 1,000. So remember, whenever we put a transaction, it's going to affect two accounts. So in this case, the two accounts that we have is the bank account and the rent income account. And then we have to now identify which account is being debited, which one is being credited. In this case, we have the bank which is being debited and the income is being credited. So after that, you identify which element of the account equation is being affected. Remember, in the account equation, we put assets equal to bonus equity plus liability. So this is the accounting equation. So we have got two sides that we have on the accounting equation, where we are having this side and this side. So what we are going to do is when a transaction is affecting this side, when the transaction is affecting this side, which is the other side of the equation, on the left side, on this side, and it's also affecting the other side. This one, it means the signs would be the same. If it's a positive on this side of assets, you're going to be have a positive this side, which would be a positive of either owner's equity and liabilities. But if you have got a transaction that is affecting one side, like on the side of on the side of the right side, whereby it's affecting owner's equity and liabilities, if you are going to have opposite signs there. If you have got a positive for liabilities, the owner's equity is going to be a negative. And the opposite is true. If you have got a positive owner's equity, it means for liability is going to be a negative. So this is what it means. So according to the transactions that we have, let's try to see. We have got a transaction which reads sold goods on credit to CCAB 800 rands, and the brackets cost price is 500 rands, issued invoice spot one. Right? You see that whenever goods are being sold, we've got two double entries that we are going to have. We are having a double entry of recording the sales that has taken place, and also we are supposed to record the double entry for the goods that are being sold. So the cost of goods being sold also, we need to complete the double entry. So in this case, it means we are having first double entry is that is affecting the total amount of the selling price. Remember, to get the selling price, we say cost price plus markup, then we get our selling price. So the two double entries that we are going to make there is the double entry that is for the selling price, of which the selling price in this case is 800 rands. Then the second double entry is of the cost price. When we are now taking out the goods that are being sold, they are going out of the business, so we need to remove them from the trading stock account or the inventory account. So this cost price is the one that we are taking the figure, which is in this case is good. It is 500 rands. So let's try to put down the double entry that we have. So it means the first double entry that we have, we are going to debit. Uh, we are going to debit on using the selling price. We are seeing that these goods are being sold on credit. So when they are being sold on credit, we open the account of the name of the person or business that we are selling goods to on credit. In this case, we are selling to CCAM. So it means we are going to debit CCAM account. If we had sold these goods on using cash or bank, if it's a bank, we're supposed to debit the bank here. But in this case, we are selling on credit. So you open the name of the person that we are selling to on credit, of CCAM, and then we credit sales. And we also have to take note that sales account is always credited. We don't debit sales account. That's we should take note of. So the second double entry that we have the double entry of removing the goods that have been sold at cost price. So we have 500 cost price of the goods that have been sold. So what do we do now? Remember, we have cost of sales. So it means the second double entry, we are going to debit cost of sales. Debit cost of sales. And then we credit. We remember these are goods are going out of the business, so we are crediting a trading stock account. So here we have got trading stock account. So we are doing this double entry on this side of debiting cost of sales and trading stock using the cost price, which is 500 rands. On the other hand, we have debiting a CCAM and crediting sales we are using the selling price, which is our 800 rand. So this is what we are going to enter there, and then we can identify which elements of the account equation are being affected. So you come here now on the other section, you see that these goods are being sold on credit. So the source document that is being affected is the duplicate invoice, because whenever we sell goods on credit, the source document is an invoice. But if you sell using cash, the source document is a receipt. So here you are having uh, duplicate invoice as our source document. And then at the account that's being debited, remember, we opened the account of the name of the person that we are selling to goods on credit. So that person, we call the person a debtor. So we can just simply say we are debiting the debtors control. So debtors is the general name that we give to all our businesses or persons that we sell goods to on credit. So, and remember, the account that we created is sales account, sales. So this is what we have. So we can now identify only part of debtors which are part of the account equation is being affected by debtors. Remember, data is an asset, so it's going to affect our assets. So in this case, we are debiting. We should know that whenever we debit an asset, it's a plus, but when it creates an asset, it becomes a negative. So in this case, we are debiting. So we are going to have a plus in terms of the 800 that we sold that good for, which is the selling price. So we are going to have a plus 800 here. And then the account that is being created is sales. Then we try to see again which part of the account equation is being affected by sales. Remember, sales, we use sales to calculate the figure for net profit. Remember, we've got the formula that we use there to calculate our net profit. That says when you say sales minus cost of sales, you get your gross profit. And then when you subtract expenses, when you subtract expenses, gross profit minus expenses, that's when you get your net profit. And then this net profit figure is going to adjust the figure for owner's equity. So net profit, if net profit increases, it increases also owner's equity. So I would see that sales that we are having here, that we have created here, if it increases, it also increases our net profit, and net profit increases owner's equity. So an increase in sales also increases owner's equity. So we are crediting sales, and we are saying is at the end of the day, it's going to increase our net profit and increase our owner's equity. So it's going to be also a plus on owner's equity column. So we are coming here to see that we are having, let's try to see. We are having a owner's equity here, so it means we are going to also put a plus for owner's equity. Owner's equity plus 800. Remember, the two sides that we have there, we say assets is equals to owner's equity plus liabilities. And we are saying if you have got a plus, this side of assets, this other side of the accounting equation should also be a plus. So we are having a plus and a plus, so that's what we have. Then in terms of the double entry of the cost price of the goods that have been sold, remember we said we are debiting cost of sales. So here we are saying cost of sales is the one that is being debited, and the one that is being credited is trading stock. According to the double entry that we summarized there, then we try to see cost of sales. What is it affecting? Cost of sales is here. You see that it's reducing net profit here. So whenever we debit the cost of sales, we are increasing the figure for cost of sales. So here we are saying the cost of sales figure has increased, so it means it's going to reduce our net profit. So you see that this cost of sales is also affecting our ownership. Since we are saying it's reducing net profit, it also reduces ownership. So we're going to have a negative in terms of the 500 of cost of sales that we have. So we're going to have minus 500 here. And then in terms of trading stock is an asset. And here we are crediting, and we said when a credit an asset, it's a negative. So it means here we are also going to have a negative on the part of asset. So remember, we are saying if you have a plus on the side of the assets, you are going to have a plus on the ownership. In this case, we are having a negative in the side of the assets, so it means also it's going to be a negative again in the other side of the equation, which is the ownership. So this is what we have, guys, in terms of this video. Those who have subscribed, please subscribe and share. We are still coming with more videos. As for this video and signing out.